Exiting trades too early is something that I know many traders struggle with. And for me in my early trading years, it was something that I just could not stop doing. I know for me, this was one of the most difficult trading mistakes that I found hard to overcome, especially in my early years as a trader. And let's be real, how many times have you got into a trade and you exited too early, but you let the trade sit in a loss for 3 days? And as soon as it went positive, you closed it with like 10 pips, but you let it stay negative about 100 pips. I did that. So I'm just going to be real with you guys and let you know that I've been there, done that many, many times. And I know that so many traders do it. And the reason being is because we don't like losing. We don't want to lose. We want to win. We want to win every trade if we can, but that's just not realistic. And over time, you start to realize that I had to improve my trade management skills, and I really had to learn how to build that confidence to be comfortable with drawdown, but also know when to take my profits and when to let it run. And that's what we're going to go over in today's video. So believe me, you're going to get a lot out of this. We're going to go through it step by step. I'm going to be sure that I can break it down in a manner that will help you. So tune in, let's get started and enjoy.
Yeah, I know I got problems and I don't know where to go. I don't want to put the blame on you.
So first, it's important to understand why you're exiting trades too early. One of the main reasons why we exit trades too early is because of poor planning, poor risk management, and a poor understanding of market movement. Most traders exit trades early because they don't know what they're doing. They don't have confidence in the system that they're trading. And you know what? Many of them have never journaled before, or they have journaled and they don't know how to use that journal to their advantage. And how do I know this is because these are things that I went through and learned during my journey in becoming a professional trader. Traders who don't understand or know how to truly set a trade and forget it are the ones who are constantly looking at their computer or phone. And as soon as they're in profit, they're closing out some profit. They're like skipping the trade altogether, they're done with it. And so you have to find a way to manage that. And here's how you do it. So the best way to avoid exiting your trades too early is to have a trading plan. And let me show you an example of that. We're going to take a look at a chart, and I'm going to use Euro AUD as an example. And we're going to look at what this pair is doing right now, but I'm going to show you a trading opportunity that I recently took because I trade this pair every single day. Okay, so we're going to take a look at Euro AUD, and I'm going to show you exactly why I took this trade. One thing you'll notice is that I have my price action captured in what looks like an ascending channel. However, price is currently ranging on the daily. What I found was that after a move to the downside, we had a push upward, and you can see that price pushed up to retest a significant resistance. And after any type of incline, especially a steep incline, notice that price went 1, 2, 3, 4, 5, 6, 7, 8 days to the upside without a retracement. Well, we did have a small retracement here, but I knew that retracement was going to come, a deep retracement. So notice how the price fell from this area of resistance. And when you kind of want to see where the price will possibly go, you just study the past. So look here, after 2 days, it came right here to 63.62. And then the next day, it went right about here. And notice where it came back to in the future. So this is why I have this support zone mapped out, because I told myself, if the price comes back to somewhere within this area, just like it did previously before it continued upward, I'm going to find a buying opportunity. Another thing that I can do too is that because we had this impulsive move to the upside. So if I look at this from a weekly perspective, you'll see this surge to the upside. So let's go to the weekly and look at that massive candle to the upside. Okay, so I can take my Fibonacci retracement tool, measure from the bottom of the impulse to where it slowed down, and then I can also look for a retracement. So if I took my Fib tool and measured from the low to the high, you will see that price rejected right near the 50% Fib. Okay, so right where that impulse started with that bullish candle is right where price rejected right off the 50% Fib. And you can see that this aligns with my area of support. So if I'm deciding to go long, I need a plan, right? So one of the strategies that we use is our channel strategy. It's a price action strategy, very, very simple. And I execute under certain conditions and rules. If those rules do not apply, I simply don't enter the trade. So what I would do is say, okay, I know that if the price returns to this area, I want to look for a trading opportunity, and I need to see some type of wick failure, some type of price rejection, in addition to all of my other rules as well. I need price to be above the 50-period moving average, which you can see that price wicked right off of this area once and two, and previously 3 times, and previously 4 times, and 5 times, and also 6. So multiple times that it is wicked this area. So that really gives me confidence, especially because I've traded this system over and over again under these rules, that I'm confident majority of the time it's going to go my way. Okay, so now here's what I do to help me not close my trade too early. I'm going to plan. So if the price does come within this area, I'm going to plan out where is my entry going to be. So let's say if we got an entry right off of, let's say 1.6245. So I'm going to go ahead and put that on my chart. So I'm going to buy at 1.6245. Okay, so I'm going to put that on my chart here. And there's my buy area right there. Okay. Now I'm going to decide where is my take profit target going to be. So if I am trading from the daily time frame, then I'm going to go ahead and plan out my targets. So when we trade channels, we look to take profit near the middle of the channel. So if I buy at support, I'm going to look to take profit somewhere near the middle of the channel. And that's roughly for about 160 pips. Now, if I have 160 pip profit potential, I want to make sure that my stop loss is within reason. So one of the things I love about the 50-period moving average is that we can use it to help us with entries, also with exits. So if the trade was to do something like this, where price would have kept going, broke the channel, also crossed the 50 MA, I can plan my stop loss somewhere below that, but still giving the trade enough room to breathe. I already know what my profit potential is. I'm just going to go ahead and plan my stop loss. So one of the things that I like to do is that, okay, if I have an entry here, I know that price can still come somewhere below here and wick off of this area. So I'm going to probably plan an additional position somewhere about 1.6204. So let's say this buy right here would be my buy number 1. And then I'm going to select a buy number 2. So my buy number 2 will be somewhere right here, like right off the channel, in case we were to come and wick right in this area as we did before. So I like to always have a backup plan. So that way, when I'm in the trade, I'm not going against my rules. I'm not closing the trade thinking, oh my gosh, I'm in drawdown. What am I going to do? And I have a plan. So I follow my plan. Okay. So my next entry will be like 1.6205. So I will put a pending order here at 1.6205. And I'll enter another position staying within my overall 2% max risk. All right. So I have my buys and now I'm going to plan my stop loss. So if I know that my best position will be about right here at 1.6205, I'm going to plan my stop probably at about, I would say probably about 55 pips down. Now, I do notice that right in that area is right where this turning point is. But keep in mind that if this price does break below this low and start to break out of our channel, the trade is no longer invalid. This pair is not wick aggressive like GBP pairs. So I feel that that's enough room to suffice for my trade, for my stop loss. And the only reason that I know this is because I've journaled it tons of times and I trade this pair every single day. So I'm going to go ahead and I'm going to measure from here to about right here. I think about maybe 54 pips. So 1.6150 will be my stop. 6150. Okay, so that's my stop loss. That's going to be my stop. So I have my buy 1. I have my buy number 2. Okay, and now I'm going to go ahead and plan out my targets. So if this is an uptrend, price is above the 50-period moving average, I expect to see some rejection at support, which we did. I'm now going to plan out my targets. So let's say, for example, if I have a $10,000 account, I'm risking no more than 2% of that account, and I am trading 20-cent lot sizes, okay? I'm going to probably go in with a few positions. Maybe I'll enter like 2 or 3 positions at my first buy. And if it comes down a little bit lower, I may enter an additional maybe 2 positions. Okay. So my first TP, I probably will do my first TP at about 40 pips. All right. So that'll be 1.6294. So I'm going to go ahead and clone this and I'm going to put 1.6294, 1.6294. And I'm going to go ahead and put this in yellow, and this will be my TP number 1. Okay, so When you have a plan, you feel confident because you know where you're going. You're not walking blindly in the market and just pressing the buy and sell button, not knowing what you're doing. Okay. Also, too, remember, you're going through steps that you trained yourself to follow in order to have some habit in the market so that you're not blindly jumping into trades. So now I have my TP1. I'm going to go ahead and put my TP2. So remember, we do take profit near the middle of the channel. So if my TP1 is somewhere like 1.6294, I'm going to plan my next one. So far that will be 40 pips. And I'm just going to plan my next one. So my next TP could be for about roughly 85 pips at 1.6325. So 1.6325. Okay, so now we have our TP2, all right, and so forth. And then I'm going to plan my TP3. Maybe I'll do one last TP. So I'm going to do a TP3, and I'm going to do my TP3 at about 1.6380, okay, 1.6380. What I want you to do is start implementing a plan like this, where you go in and you plan out your trade. But here's the deal. You need a winning strategy that gives you an edge, that's been tested time and time again, that you know works in your favor. You know it so well that when it doesn't go according to the rules, you know when to exit. You know when to cut a small loss. That's where you want to get to in your trading. And a lot of you are missing that piece. But I promise you, it will develop. It just takes time. It takes a lot of studying. It takes mentorship. It takes a lot to become a really good trader. But I promise you, it is so worth it. And if you follow our methods that we teach, I guarantee you, I say that with all confidence, that you will be successful. We do this full time and we know what we're doing. We've been doing it for a long time now and it works. But you have got to get rid of that greed mentality. You got to stop following so many people online. You got to stop following all these people who flash these cars and flash riches and all this nonsense that is not realistic. And I'm just being 100% honest with you. Trading that way is going to have you to be reckless and emotional and left with no money. And you don't want to do that. The next thing that's going to help you avoid exiting trades too early is having a journal. So now that you have a journal, what you're going to do is you're going to now observe how price works around your strategy, and you're going to record what happened. Did it hit your TP1? Did it hit your TP2? Did it hit TP1 and TP2 and then it rolled back to your initial entry? Those are things you want to record. Why? Because you're going to find a trading opportunity in the future when you're in that same position. This was something that I started to notice when I was swing trading a lot, that, you know what, I'm sitting in trades for 3 days, 4 days. The price fluctuates up and down. I'm in amazing profit. And then the next day I'm back in the red. I'm like, what? And so I started seeing that I have another opportunity here and I just need to really be wise with my risk management. All of that came from journaling and years of practice and just getting better and better from every trade and every outcome. So that is going to help you also avoid exiting trades too soon. All of this is going to come together. The last tip that I have to help you to avoid taking profits too soon is always pay yourself. Okay. Students hear me say this all the time, always pay yourself. And what I mean by that is that when you see a good high probability setup, you're trading from very strong key levels. You want to manage your risk wisely. Go in with a few positions, keeping your lot size relatively low. And when price is in good volatility, when the market is moving, I usually set a rule for myself. So once a trade is in at least 50 profits, I like to pay myself. Okay. Sometimes I will even pay myself at about 35 pips or so. If I'm waiting for a bigger target that's about 100 pips or more, I like paying myself in between that while price is on the way to that target. Now, I'm still not just closing for really small, tiny profits because I can't really make a living like that, right? But what I am doing is taking advantage of volatility when the market is right. And what I mean by that is because a lot of times we will see that even during high volatility, if we're holding until the market gets back to the middle of this channel, there's a probability that, for example, look, when the market came here, it started to push to the upside. And then look, it came back down to retest the entry. Had you got into this trade on July 5th, you would have been in that trade for 24 hours. It would have retested your entry and then started all over again. So some traders don't really care about that, but I like to be paying myself all the time. These steps that I've gone through are going to help you to avoid closing your trades too soon. I recommend that you watch this video multiple times. implement what I've gone over in the video, and simply just take note and see what you gain from it. I know that you're going to gain a lot, just have to consistently put it into practice. So let me know what resonated with you in this video. What did you find helpful? Let me know how this goes for you after you implement this exercise. Guys, I hope it was helpful. Again, if you are new here, make sure you subscribe, turn on that notification bell. For those of you who are returning, smash that like button for me. Make sure you comment on this video. Let me know what other training you guys would like to see next, and we'll do our best to continue to help you guys. Stay safe, stay blessed. And as always, we hope you end your week on a blue note. That means that you stay profitable, and we will see you in the next training. Have a good one.
It doesn't come from here or there, but in now. A picture perfect moment.